What's going on, everyone? It's your favorite founder and host, Jerlisa Juju Fontaine. I'm a proud product manager turned digital media entrepreneur and community builder with a passion for all things business, innovation, productivity, and of course, digital health. I'm on a life mission to create a world where people can live healthier and financially fulfilling lives, all whilst doing the work that they love. So, how does this podcast fit into that? Step into the world of the Very Necessary Decisions podcast, where I interview industry experts, thought leaders, and change makers on the very necessary decisions that they had to make for the sake of their accelerated business and career growth. We take deep dives into their innovative strategies, business models, and more. And don't worry, we aren't sticklers on this side. We make these conversations informative, yet fun and chill. Take a listen. Hi, everybody. It's your favorite host, Jerlisa Juju Fontaine. Oh my goodness. I know I'm so dramatic, but this feels like actually surreal. And not because it's my first time like podcasting or anything like that. Obviously, you guys have been with me since 2020. And if you're new to this, not true to this, I look forward to you becoming true to this. But I'm really excited because now that we've officially undergone like this rebrand, right? We're no longer the HuCapital podcast. We're actually now the Very Necessary Decisions podcast. And like I had mentioned in prior episodes, but if this is your first time connecting with the brand, what's going to be a little different about this segment is we're not just going to be talking about like the career journeys of like people who are on the podcast. We'll talk about that a little bit, but I really want everybody who's listening in to fully grasp the knowledge and thought leadership that the people who are on this podcast possess. People like the very person you're seeing on the screen next to me right now, Mr. Eric Green. And what I want for you all to get from their knowledge, their thought leadership is when it comes to like growing a fabulous career, this dream career that you want and building the businesses of your dreams, it's not all glitz and glamour, y'all. I'm so sorry. I wish it was, but it's not. And the people like Eric, they have to make what I call very necessary decisions in order for them to see their dreams through. And these very necessary decisions can encompass pivots, having to maybe break apart certain relationships and establishing boundaries, right? Like making drastic changes to their business models, and maybe sometimes even making very necessary just life adjustments for the sake of going after what it is that they want. So that is why it's called Very Necessary Decisions. We have a lot of talk today around tech, around getting access to capital, around getting access to accelerators and non-dilutive funding. We're even going to talk about some fun stuff at the end during our flash round, and I hope Eric's ready for it. But
I'm ready.
Before we get there, I need to give y'all a quick spiel on this man. He will tell you more about himself, but I have to brag for him real quick because I think he's popping, which is why he's here. So, with that being said, everybody, we have the lovely Eric Green present today. He is the founder. He is the CEO of a company called VYLN. He co-founded this company with a peer of his who's a software engineer. That person's name is also Eric, but last name Patel. I'm going to be corny and I'm going to call them Eric Squared today. Eric's obviously not with us. Our interviewee today is just Eric Green. But to give you context on the company, I think it's really cool, especially because I am a podcaster, right? And what VYLN ultimately is it's a company. And it's building the future of audio with its advanced technology catered to multiple industries, right? There's gaming, there's music, there's production, and there's more. And the reason why I wanted to do this introduction is because I need to brag for Eric real quick. Like, not only is he building a company both in the hardware and software space, but the partners and the relationships that he has in building this, it's elite. Like, we're talking about Black Ambition, which is owned and operated by Pharrell Williams. The Pharrell Williams, the super mega producer, one of my favorite producers, which I'll just give a quick shout out. I love me some Pharrell. I love me some Timbaland. And I freaking love me some Jermaine Dupri. He gave us Emancipation of Mimi. He gave us Usher's Confessions. I love him. I love him. I love him. Now I'm getting carried away. Next up, he also has a partnership and relationship with 10X Beta Studio. There's Harvard Innovation Labs. There's AWS. And that's just some of them, not all of them. But I felt like it was very important for you all to know at least those, because I hope for you all to one day also have access to those relationships. So that's my spiel on Eric. I'm going to shut up. Eric, the people want to hear from you. Who the hell is Eric Green? One derivative of Eric squared.
Yeah. Thank you so much for having me on. I really appreciate it. I'm really excited to get into this. I think, when it boils down to it, I'm just a kid from Delaware, big gamer, who really just had a passion for solving problems. I learned like very early not to get too attached to solutions, but get attached and fall in love with the actual problem that you're trying to solve. Like there's a lot of journey that comes with it, and you need to be able to not want your solution to be the end all be all. The first idea you have will never be what goes to market. And I learned that very young, just doing entrepreneurial things. I was selling t-shirts after my AAU basketball games. I started a digital marketing company in high school. I ended up working with the money team, Floyd Mayweather's company on the digital network. Went to Howard University. And that's where I really stepped up in terms of my entrepreneurship and startups and getting a lot of that knowledge and connections you're just mentioning.
I love that. Wait, quick question. I think you may have mentioned this. What undergrad did you go to?
Howard University, not Harvard. Howard
Ah!
University.
Well, let's be honest. Harvard folks do feel like they are the Harvard of the HBCU community, right? So there's
Yeah,
that.
yeah,
But I wanted you to give that school a shout out because although I never had the opportunity to attend lovely HBCU, I think that the culture and community and the ecosystem just around that HBU system itself is just like fantastic, right? Like we're starting to see as of the last few years a lot of programs and initiatives being built around the HBCU ecosystem to ensure that Black and brown students have access to, once again, the very accelerators and programs that you've been through in order for you to build the company that you love and have today. So shout outs to Howard. I know a bunch of y'all,
yeah,
I'm saying y'all a little cocky, but I like y'all.
yeah. I'm roughing it right now, actually.
See?
So yeah,
Boom. Once again, like one thing about Howard people, they're gonna show up and show out every single time. Listen, I'm gonna give love to my little what I called fake HBCU, the University at Albany, upstate New York. We had a
yeah.
time. So shout outs to us. Anywho, but I love your spiel about like who you are, just kind of like breakdown of like your intro. Um, Something that I wanted to ask you was, and I'll sound very cheesy for this, but I want to know when you graduated, right, you could have stuck out the route of pursuing a 9 to 5, right? You could have just worked corporate, still be doing that today, and etc. But you chose a very much so more difficult path. And I have a question for you. That question is, what was the very necessary decision that you had to make in order for you to pursue doing this full time?
Yeah, I think that what people often kind of think is that, you come up with an idea, you go out and you raise some money, somebody just hands you a check for, a couple 100,000 or a couple million, and then you can kind of just live off of that. But it's actually very different in reality. So when I first graduated school, I was working at BlackRock and still working on my company at the same time because, the startups, until you're generating revenue and you can pay yourself a salary, they don't keep the lights on. You're not really able to. I know in the WeWork documentary, we have that big scene where he goes into Chase and Jamie Dimon, gives him hundreds of millions of dollars on credit. That doesn't really happen until you're at that level. So for a lot of young adults that want to get into it, the reality is you do need to sustain yourself in another way. And even having that kind of experience was really recognizing the differences where it's like I, come in as an analyst like everybody from college, and you're really faced with, how many levels above you that are making decisions while you're sitting
Yeah.
here and you're being able to make decisions, but people just don't give you the benefit of the doubt that you know what you're doing because you just finished school and they've been in that seat for 15 years before you. So you're essentially just doing the grunt work, then there's no problem with that. It needs to get done. It's important to the business. But then ultimately, I think that last summer, I was just over a year in at my company, at my previous company. And I just decided that it would be the better decision to just run my company full time and take that leap of faith on myself. But yeah, I definitely recommend that people do it once they have a level of understanding of their necessities, like making sure that you have the ability to, sustain yourself. And, if there are people you have to take care of, make sure that you can be able to take care of them too, because startups do fail. And all of that time and money will be gone. So that was a necessary decision I made, just to kind of take that leap of faith, see what would happen and put my best foot forward.
I love how you explained that, right? Because that was a very powerful like level of like rawness and transparency. In the first episode of this podcast, I did kind of just break down like the stats on the frequency and pace at which businesses in the US fail, right? And the reality is, according to the Bureau of Statistics, I think it's Labor and Statistics, I always forget what it's called, but they were saying that honestly, like within like 20 years, like 80% of businesses are going to fail. That means that most businesses that are created are not meant to last. They're meant to come to an end at some point. And I think to your point, like people have to be very intentional about the decision that they're making financially for the sake of building a business. And maybe even also asking themselves, like, well, how long do I expect to be in business for? Right. I mean, the negative is bankruptcy, it gets shut down, a pandemic happens again, but then there's a more positive outcome, right? Maybe you go through a merger and acquisition, right? And maybe that was the route that you wanted. Maybe you successfully go public into the stock market, and now anybody who's a retail investor can have access to being an investor in your company, right? So I think that because we both acknowledge that most businesses can end up failing, people should be a lot more strategic about what do you think the quote unquote end looks like? What is the end game, the end plan, or the continuous plan? So I appreciate your honesty on that. I don't know if you have a comment on that stat, by the way.
Yeah, no, it's absolutely true. It's absolutely true, and the rate is even higher for startups. I mean, if you look at like the rate of technology changing with OpenAI, Omni that just came out yesterday, I think there was 8 or 9 YC founded startups that are essentially useless now. And it's like these are the cream of the crop in terms of startups, and timing is really everything. You need to have the right time. Everybody says, I think Warren Buffett even says, timing the market is not as important as time in the market. And it's just one of those things where you really need to be strategic about it. People don't start the company with their exit strategy in mind. But that's something that they really stress at when I was at Harvard Innovation Labs last summer. To start with that in mind, you can essentially only do a couple of things, right? Like you can sell your business, or you can go public, or you can make the business big enough privately so that someone else takes your job and you kind of just sit on the board. But that's not really there's basically only two options. So you need to have that in mind for yourself, and what kind of exit do you look for, right? If, like,
Yeah.
depending on how many investors you have or how much money you need to raise, like there's companies nowadays that don't make enough revenue, but they've raised $1 billion, and by the time they pay back all their investors, the actual founders will have nothing.
Nothing.
Like I've met people that have exited their company and actually owed hundreds of thousands of dollars, and not make a dime. So you need to have all of that in mind and plan that strategically. So yeah, it's definitely very important.
No, I'm glad you mentioned that. And to be honest, we'll talk a lot about funding very soon. So real quick before we get into the serious stuff, right? Just to kind of kick things off a little lighthearted, I just want to know, is there anybody in your life today that you want to highlight, that you want to celebrate? What do you want to mention today?
Yeah, I grew up as like a big Zuckerberg guy. Just like being a college entrepreneur, that was always interesting to me. Like I never even wanted to have an internship in college. I ended up having internships, but I thought that was always just like the coolest thing. But then, as I've grown and learned and met more people, a lot of founders that I really like, D'Angelo Sanat with LP, he's a really great guy. He's a FAMU graduate, and he kind of made one of those pivots too. He was an engineer, and then he left that engineering position to work on a company that is really innovative right now. So definitely shout out to D'Angelo. He's a great friend of mine.
Oh, what's the name
And
of the
Tyler
company? If
Green
you don't
too.
mind sharing.
All Peep. You can check them out at
Oh, yes, all
allpeep.com.
peep. Yes. That's fire. Oh my, I love that. I love that. So yeah, shout outs to them. Now for the serious stuff. You ready?
Yeah, yeah. Let's
Let's
get
do it.
into it.
Let's do it. Let's do it. All right. So for everybody who's listening today, I really want us to spend like a deep dive on just better understanding, right? For someone like Eric who is building the company that he's building. What is the business model around that? How is that kind of business making money? How does he determine the market fit? And honestly speaking, like why the hell should anybody care about his company called VYLN? So, Eric, I'm going to give it to you. Talk about your business and help us understand just like what it is, who you're serving, what does your market look like, and just what's your business model?
Yeah, so we had a fairly interesting story. So when we first started this company, it was actually called Emu Gaming. It was essentially targeted only for gamers. And what the device was, it was a cross-platform communication tool. So you could start a chat party on your phone and hear your game audio and your chat party through your headset, just so you could be able to talk and communicate with anybody, whether on PlayStation, Xbox, or PC. It was just a little device that would either plug into your computer or plug right into your PlayStation 5 or Xbox controller. And then the software around that was a gamer-centric content platform where you're able to start parties with your friends, find new friends, post content, and grow your audience. Even if you scroll on TikTok Live now, you'll find a lot of gamers that are sitting in there and they have maybe one person in there, two people in there. It's really hard to really get deep market penetration, especially when your audience is so sporadic and spread out. When we're talking about 300 million people in the US just alone, how many of those people are gamers? How many of those people are actually watching gaming content? How many of those people are donating, subscribing? And then why would they change from someone that they're already watching or like a Kai Cenat, a really popular person, to watch you play the same game? So, it's very difficult for a lot of gaming content creators to gain traction in that space. So we wanted to provide them a platform where everybody on the platform is interested into that space. And with that, we actually derived a business model around the software. So the hardware is just kind of like it sounds. We sell devices. They're $150, which is right around the monthly average gamer spend. We didn't want it to be more than 1 month of gamer spend, so it wouldn't be a different kind of a price moat for our customers. But we wanted to have a subscription model as well, so you could access the full capabilities of the device and create custom connections. So you can use this device essentially with anything. It can be for podcasting, corporate communications, hybrid education, live audio events like the news in the morning, or even some podcasts like this right now. But for our kind of consumer clients, we have essentially the same offerings as the hardware. For the enterprise clients, the only difference is the enterprise clients actually have engagement tracking software, and eventually we're going to be building in it's kind of a secret, so I'll drop this here. But essentially, we're going to be using the hardware to capture audio for, say, a meeting, right? So you're in a global all hands meeting. The software essentially uses AI to recognize the key talking points of it, clip those actual video things, and instead of sending out, a page or 2 page long email with meeting notes, it actually creates short form content for your employees. And then for higher education, it tracks who is actually more engaged in the classroom, and then it can actually take that same exact model and then take pieces of the lecture and stitch them together so you can get a short form content of your live lecture if you want to watch it back, or if you missed a day in class, or whatever the case may be. So we really derived that just because we found out like what the people want. Did a lot of customer discovery. We've been working on this for now over 3 years. So
Nice.
we've talked to a lot of people, a lot of customers. And then for the software side, we didn't want to have the normal kind of repression model that is on like Meta or TikTok or YouTube Shorts, where they want you to pay and boost your content. We wanted to have a growth model, and what that enables us to do is to have a sponsorship marketplace. So if Juju is a creator, you can typically expect to get around 10% of your following in dollars per post if you're a social media influencer. And the companies that are sponsoring posts know this. So we give them essentially a platform for them to find creators they have all the same demographical data you would find on a Meta ads. But that you're actually just doing it for this one person, so you can target their audience specifically. A lot of
Yeah.
problems are right now, you might spend $100,000 a month on ads, it sounds like a lot, but trust me, it's almost nothing for these companies
Right.
nowadays. And you are really just kind of putting it out there for whoever's swiping by, and you get swiped by, and that's it. You don't really have any real good traction. And there's so many bot accounts that are taking up those views. It's just not a really good model for the way that these platforms have grown into. So
Right.
our model is really focused on not, over infiltrating you with ads while you're scrolling or while you're viewing anything, and being able to, give the content creators what they really want, which is corporate sponsorships. So facilitating that as well. So yeah, we have a kind of an interesting kind of bespoke model that we've really worked with a lot of people to create, and got a lot of feedback on. So that's going to be what we're going with.
I actually love that. I have so many comments and so many questions. First things first, once again, everybody, you know who I am. I'm a host, I'm a podcaster, I'm a moderator, I'm a public speaker. I am his target audience, right? Like, I would need and benefit from something like this, right? And I do want to let you know, Eric, that when I first was exposed to this product, I was like, there's definitely a need for it. And now that I'm listening to you speak about it on this call, I actually did not know and I wasn't aware of the AI capabilities of it. And I think it's really good that you are really staying on top of like emerging technologies and recognizing that in light of platforms like OpenAI and Gemini through Google and Copilot through Microsoft, and there's so many more, you're recognizing I cannot miss this AI wave. There's no reason for me to be producing hardware, software products that do not leverage and encompass AI to continuously solve people's product a problem, excuse me. And I feel like for everybody listening, that's a very important thing to grasp, right? Like he's breaking down to you what was the original model of the, I guess, first version of the company, the first version of the business. And like anybody else, Eric had to make some very necessary decisions and pivot. And one thing I do want to ask you though about that pivot in terms of not only catering to the gaming market, but catering more so to also podcasting, music, production, etc. My question is, how did you feel when you had to make those changes? Like, what was the emotional attachment to having to technically rebrand your company?
Yeah, I think that like the emotional attachment is kind of like a baby. I know people always kind of say it's like cliche, but it's like at the end of the day, the actual core product offering is the same.
Yeah.
So like the technology that we invented enables you to connect two or more live audio inputs to one audio output. So like for a podcaster, you're in a studio, you have multiple microphones. Instead of having those all hardwired into a big mixer, you can just have this one device to wirelessly connect everything and making everything a little bit simpler, right? So it's like it was kind of like a boom moment in my mind where it's like, oh wow, like why didn't we think about this before? Like this is technology that's really applicable to so many more things. And it kind of what was funny about it is what came out of it was I actually used ChatGPT essentially, and I just asked like, what can this product do? And it gave me a whole range of things. So I just kind of did some market research and found like the ones that I think that we can combine. Because like, when you're in a startup, you don't want to be building products that are super specified because they need to
Yeah.
become an agency. Like that's a big difference. A lot of companies they build features, and a lot of companies are just agencies, and they're making bespoke websites and features for every single one of their clients. So we don't want to do that. So we want to make sure that we have a big enough scope with the products that we are building so that they encompass a large variety of problems. And a lot of those problems are audio related, whether it's in the workspace, the home, or whatever it may be. So it was, at first it's kind of like, it wasn't a lot of pushback for me. It really made sense. And, it was more of an expansion more than a reduction. And that's another thing. I think a lot of people, they look at something and they say, oh, wow, this is a phone case, for example, we need to add to this phone case. Let's put a fan on it. Let's put, charging back on it. But really the companies that really do the most successful things are things that make your life easier and they take steps away instead of adding to what's already out there. So we wanted to make sure that we're taking steps away from, educators and corporate people and, gamers, especially in that process.
I am so proud of you. That is literally amazing. Like the breakdown, what you're pursuing, what you're doing, all amazing. And I also even want to revert back to like that comment about access to corporate partnerships, right? People who are musicians, people who are podcasters and etc. They are always looking for additional access to funding. And if you can serve in a role in a function that allows you to facilitate those deals, shoot, why not? Like they would more than love you for that, right? It's like you're giving them a quality physical product, a quality experience overall, whether it's mobile, software, etc. But also you're helping them put more money back in their pocket. Like you're basically telling me I'm paying you, what is it, 150 for the device you said?
Yes.
And in return, you're probably going to help me make like 10 times more than that. I don't know. It may not be for every single customer, right? Obviously not. But for the ones that you do, I guess, like surround yourself with or partner with, like the fact that you can probably help them like get back theirs tenfold, like that's pretty amazing. So love what you're
Yeah.
building. I think it's phenomenal. That's why you're here. And I'm glad that you gave us that sum up of what was the origin story of the company and where are we now.
Yeah,
But
absolutely.
Now we're changing drift. Are you ready?
I'm ready. I'm ready.
Let's do it. Awesome. So, in the beginning of this interview, I had mentioned to everybody that the cool thing about what Eric's building is that he's also been able to surround himself with institutions that are doing also amazing things, right? We're talking about Harvard Innovation Lab. We're talking about Black Ambition. We're talking about AWS. And the cool thing about Eric's story is Eric has done a lot of programs and accelerators to build the business that he has right now. Like you see this business, you see its value, and you probably think, oh, easy peasy. No, a lot of work has gone into it. And I do want to like really investigate today, Eric. Like, give us like, I guess some insight into like all of these like programs that you've been a part of. Like just name them so people know about them.
Yeah, so the first one I did was called New Chip Startup Accelerator. It was 2019. So I guess like a quick brief story about that. So I originally got recruited to a college to play lacrosse. I was playing at a school in Boston. The school I was at was a small school right next to Boston College, and they actually ended up shutting down. They were doing money laundering on the board. So we got an email on Christmas, and they were like, "Hey, this is the last semester in the spring, but you guys got to go somewhere else." So that was kind of a weird thing. So I actually ended up living on Nantucket that summer afterwards. I was already up in Boston, and my friends were living there. So I stayed there, and then I just saw this ad for this company, New Chip, and I had originally actually been working on a different startup called Haggle, and Haggle was it was a bartering marketplace. So instead of like a resale marketplace, I found out that like a lot of people they're selling they buy a TV for $500. 2 years later they want to sell it. Someone gives them $20, $40, and then but if you could trade that TV for something you need, maybe you need a standing mixer, and the guy doesn't need a standing mixer. I can trade it peer for peer. So I started with that, and that's where I really learned like startups were so much more, like all of the legal stuff and the taxes stuff and the hiring and the HR and the marketing and fundraising even. And I guess a little bit before that, actually, I was part of the New Venture Summit. It's a New York Venture Summit, and they do one in Israel every year. They actually just did one, I think, in San Francisco for the first time this year. And I got a random email one day from my high school, and they were looking for volunteers. So I went up there and I volunteered, and I led the ed tech room, the health tech room, and a couple other rooms. And these rooms are full of venture capitalists and angel investors. And I'm like 17 at the time, I'm not even into startups at all. And I have no clue. I walked up to the guy, it said angel on his vest. So I'm like,
Ah,
what does that even mean?
yeah.
Like, what is it? So he's telling me, but I'm not really understanding. It's like, you just have all this money, you're just giving it away to people to maybe do something. Like, that's kind of
Mm-hmm.
crazy. But yeah, and then, so I did all those programs. I did the Black Venture Capital Consortium. I just actually was in the HBCU Founders Initiative Accelerator. They just finished. That's by Nextcubed. Marlon Evans, he is running that. He's doing a really great job over there. I met him a couple of years ago, actually, at a pitch competition. So I've probably been in probably close to 30 pitch competitions. I won 14 of them. The last one was Black Ambition, so I'm trying to get another win this year. It's been a couple of years now. But yeah, just kind of always looking for opportunities. Then Harvard Innovation Labs is really great. It was powered by the Schultz Foundation, the owner of Starbucks. He flew out a select group of HBCU founders and founders from sub-Sahara Africa. And they had us there for 2 weeks. We were doing programming and sessions from 8 a.m. to 6 p.m. every day. It was really a great time. It was really a great time. They brought in so many industry experts. The venture associate of the year for last year from Time. It was just really great, and the amount of people that you meet were just really valuable. So yeah, I just apply to everything I see. Essentially, my friend actually just sent me one a little bit earlier. You have to put your name out there. You might not always get it. I lost my first pitch competition, and I thought I really should have won. I lost to a clothing brand, and then I ended up beating the guy 3 times in a row after that, and
Good.
just in competitions he was in. So it's kind of like an unspoken rivalry, I would like to say.
No, I love that you broke that down. And to be honest, for everybody who's listening, I hope you either, I guess, like rewind and write down all of those programs. But if you see yourself affiliated with the HBCU ecosystem. There's so many different accelerators and programs and organizations that are built around trying to challenge you to become entrepreneurs. Whether you're an actual student or you're like a recent alumni, like tap in and try to figure out like what's out there. And then Eric also dropped some gems on different summits and different conferences and events and meetings and forums and other programs that you might want to consider joining so you can be a part of that technical engineering ecosystem, the angel investor venture capital ecosystem. Like these are all spaces that you need to be in if you really want to build a company that's supposed to last, or if you sell it hopefully for a lot of money and you don't end up owing anybody after you sell it, you only end up benefiting after you sell it. Yeah. Remember
Right.
that? Yeah.
Right. Yeah, that's crucial.
um
You want to make sure that.
like come on, let's be for real, right? And I think for Eric, like Eric's so humble, like winning like 14 out of 30, that's not light, that's not simple, that's a huge ass deal. So I really do want to commend you for that, Eric, but I do want to follow up with one question. You had mentioned that people probably send you links to these programs and accelerators and then you go ahead and apply, but what do you think helps you get even selected to be a part of these accelerators and these programs? What are you putting in your application that you think is setting you apart?
I think that 'cause I've thought about this a lot, right? And it is great to like be a part of some new programs, but it's always the ones that you don't get in that are always the ones that stick with you. And I think that the biggest difference is really figuring out what they're prioritizing, right?
Yeah.
Like someone like Black Ambition, for example, right? Like they have thousands and thousands of applications now that is getting really big. I was part of the second class. Now the applications actually are open now, by the way. They just extended
Mhm.
them until the 17th. So if you see this before then, if not, I guess it's too late. Maybe next year.
It'll be too
Um,
late.
yes. Like a program like that, like they have core competencies that they focus on, and if you go on the website, you can see like what kind of companies, like there's a lot of health companies, a lot of AI kind of backed companies, a lot of consumer companies, right? But what they don't have is a lot of gaming companies.
Yeah.
So I think that having like that gaming tag on us is really interesting. Gaming industry is larger than the music and the film industry combined, just
Hmm.
in America. And if you look worldwide, it's like 5 times, and it's only growing more and more. So it's like when you get people that are in these diverse industries that aren't just trying, make like the next social media app or, the next, DoorDash kind of thing, people pay attention to that, I think. Being able to clearly and concisely explain yourself too. A lot of people have a lot of ideas that they all kind of throw on a slide and just kind of send it over. But
Hmm.
being able to really like plan out your slides, like I've never used PowerPoint for any pitch deck. I use a product called SlideBeam. Shout out to Kaya. Kaya's a really cool guy. It's the founder of that, and now they've expanded that now to Angel Investment Network too. So it's like you can also have steps, and being able to explain your vision for the company, I think
Yeah.
is really important. And also, don't be scared. That just kind of reminded me. A lot of people are always scared about people taking their ideas. People can take your
Let it
ideas, but
go.
they can't take your vision. They can't execute the way that you're going to execute it. And at the
Yeah.
end of the day, unless you find a Mark Zuckerberg and he really has some vendetta against you, and he really just wants to get after you for not doing something, no one's going to go ahead and build your product. There's a lot of time, money, commitment, and resources that they most likely don't have. And even if they do have them, they probably won't do it anyway. So
No, that's
just be able
facts.
to share your stuff and get feedback before you do it. Reach out to people that are on the boards of these
Yes.
places, or on the team slide. Every VC, every program has team pages. Go on the team pages, reach out, say, hey, what do you think about this? Because there's always nepotism involved, right? So if
Oh,
you
of
knew
course.
somebody, they're always going to look at you a little bit better. So I think that's really helpful. And then especially picking a big market, right, and really understanding what you're going for. A lot of companies, they're not venture backable. That doesn't mean that they're not a
Yeah.
good company, but they're not venture backable. If your market size, if you're doing the math and your total addressable market is 10-15 billion dollars, like that's not a venture backable company. I think our total addressable market is like just under $200 billion, just for
Mhm.
like our hardware component. Our software adds a couple more billion to that, and it's like that's even kind of reasonable TAM, but it could always be bigger. You need to be able to have a large addressable market. It doesn't mean that you're going to get it all. You probably
Yep.
won't. You're not going to get 100% market share, but you need
Hmm.
to have a large. You need to make sure that you're venture backable. And a lot of companies they are too small in terms of their maximum is too small for you to
Yeah.
even get a check. So you need to have a big market.
No, honestly, like that was very thorough gems. And I'm happy you started having that conversation because honestly, in like 2 seconds, we're going to start talking about like venture capital and access to capital. And to your point, there's also a conversation to be had about product market fit and what your total addressable market is when you're looking for VC funding. But before I get there, just really quickly, I want to be shady for a moment. Once again, you have been a part of so many accelerators, so many programs, and while you have won 14 out of 30 of them, I remember our conversation about there being one particular entity that overpromised their commitment to underrepresented founders and entrepreneurs. And while you were a winner of their program, competition, et cetera, whatever it was, one, it doesn't look like you got everything you were promised. And two, it doesn't look like anybody other than you got anything they were promised. So just real quick before we wrap this up on the next topic, like what happened?
Yeah, so COVID was a weird time, right? COVID, George Floyd, Black Lives Matter, these things really drove companies to give money and essentially, promote Black business, promote Black entrepreneurship. So a lot of them went after HBCUs because that's, where you find the largest pool. You can cast the widest net there versus, or PWI. And, there'd be a lot of people. So there was one specific company that had pledged, I believe, $250 million to Black and Brown and underrepresented peoples for venture, essentially. So I won the first competition. I got invited to a second competition. This is supposed to be an ongoing thing over 4 years, which would have just been, I think it would still be going technically if it was still going. And then during that interview process, they actually said that they're not even going to do the second competition. And so we're talking about maybe 15 grand that was awarded out after, over a promise of 250 million, I think a lot of those things too, I think it was another really prominent investor. He had a pledge, another 100 million, I believe. And the way that some of those things happen sometimes are, there's actually a good friend of mine that did a series of this on TikTok. His name is Tailpipe. If you want to look him up, it'll pop up. And he goes into investigating this and seeing if he can actually get money from this opportunity. And the way that it happened was that the 100 million was broken down into about 2 to 3,000 different venture houses or different studios across the globe. So some of these, and a lot of people kind of don't recognize, like, you can't just fly to London and go raise money. Like, if they're not going to give you a check if you're American or African founders, they really struggle a lot because there's a lot of, support for them here, but they're not writing checks in Africa. So the pool for, and essentially you have to just go through the venture process with these companies. And ultimately, it's still a decision. It's a yeah or nay. It's not just as clear as cut as, here's 100 million. We're going to give out to, 10% to ed tech and, 10% to fintech. It's not like one of those situations. But this specific example I'm talking about, it just kind of always confused me because just nothing else is out there. Even if you look it up to this day, there hasn't been an article since 2021 about it. So, it's just very confusing and, just being the only person that I'm aware of, at least. If they're out there, I'd love to talk to you and see what your experience was like. But being the only person to be awarded is kind of one of those things where it's like no one really knows. No one probably even knows that I won it. I'm not out there at all. And a lot of that stuff was happening during COVID. That I think that was a big part of the success, right? Like earlier we talked about being the right timing. During that time, there was a lot of legit places that were just essentially handing money out. And we're like we were talking about like venture backable companies versus not. A lot of people don't have that knowledge about different startups. They just hear it's business competition and tens of thousands of dollars, and they may apply with somebody selling bundles or selling hair, or selling food, and a lot of those companies like they're automatically X'd out. So if you have one even venture backable company, they're going to be awarded that. So I think that's like a big part into education as well, into what you're doing, and there's nothing wrong with jumping into stuff, but I think that you always like have a good background of like what you're actually trying to do here, especially if you want to actually pursue it and do well with it.
No, for sure. No, thank you so much for that. And once again, like I'm glad you addressed all of that because I kind of feel like it definitely provides context into just that world overall. And I think that actually kind of makes this next question a little bit more brief because you gave so much of a thorough explanation. I love that. Like, I feel like I'm interviewing the right person. Like, I don't have to ask everything that I set forward to ask. Like, you already know what's coming. But you participating in all these accelerators and getting access to all this funding, correct me if I'm wrong, but you've been able to basically fundraise around like $510,000 so far, correct?
Yeah, just a little bit more if we count in like all the non-dilutive. So yeah, probably closer to like 650 around there.
So let's say this a little differently. You have been able to access around $650,000 to build a business to where you have it right now. That's a
Yeah.
big mother flipping deal. This is a black man, Delaware, United States, and he is building once again a 650K company that will one day be a multi-billion-dollar company. I'm speaking it into existence, okay? But no, I mentioned that because I do know that you are basically on a pursuit to pursue your next round in funding, and ultimately the
Yeah.
target goal for that would be around 3.5 million to really build out a solid start for what's going to be rolling out when these pre-orders pretty much, have to start being sent out, right? So my question
Yeah.
to you is like, where are you getting this money from? Like, where are you getting access to the additional funding to get to 3.5 mil?
Yeah, so we're fortunate enough to have some really great advisors on our side, and the advisors have really been able to connect us with like a lot of strategic investors. In gaming, it's kind of difficult, where it's not like fintech. Like there's thousands of fintech VCs, but in gaming, a lot of them focus on actual game development or on peripherals, and
Yeah,
those companies they're very small, and sometimes they're not in the U.S. and those things. You have to navigate those, and they take a lot of legal. If you don't know, every lawyer is expensive. That's a big thing to know. I didn't realize I should have just been a lawyer. That would have been the good necessary decision. I should have just
see that, see
but,
that.
I think that and then just meeting people. I'm in New York right now, so I'm fortunate enough to be in that startup ecosystem where there's essentially events every day. You can just walk into an event for free and have free food and drink and mingle with founders and investors, and you might just find the right one. And we've been fortunate to find a couple of people that really believe in us and what we're doing. So we're expecting to close our round in Q1 2025. We're probably going to start raising in Q1. So we're going to try to do a 3-month sprint and raise the $3.5 million. And then there's other ways to do it though. So like venture searchers or scouts, they're always out there. If you just look up venture scouts on LinkedIn, there's
Yeah,
a lot of them, and they basically just fulfill a pipeline full of opportunities for funding. You'll talk to them, no pressure, no NDAs. That's the other thing. Don't try to make people sign NDAs. They don't like that. They get offended.
they do.
So, you just make sure that you go about things the right way. And, there's also search funds, and the search funds, say you raise $1 million, they may just take 10% of it, but they'll
Yeah,
raise you that $1 million almost immediately. Like it's like nothing to them because they already have all the connections. They already have all of the, relationship built and the trust built, where they can basically just go and say, hey, I need $1 million for this guy. And then they'll give them the $1 million. They'll make $100,000 and go back to their apartment and try back up. So, don't be ashamed to
literally. And listen, hopefully one day that could be you going back to your apartment in
yeah,
Tribeca, wherever it is that you want to
absolutely.
live.
Absolutely.
No, I love that for you. And thank you so much for giving us that thorough breakdown on how you're getting access to capital. Luckily for you, you have these like partners and relationships that you have advisors who can kind of point you in the right direction on where to access this. For people who are not there yet, how do they, I guess, get familiar with different VC firms or angel investors? Like, where do you go looking for stuff like that? Do you even look for that?
Yeah, I mean, I think that the best places to look are already people that you know. Like if you went to college, like try to go to your college. A lot of them have, even investment programs where like the students are leading the rounds. I know with HBCU, Blank Venture Capital, or no, not HBCU, but Black Venture Capital Consortium, they have, I think, like 25 schools that they offer, a direct investment program. So even if you want to be a VC, you can join their program, learn about venture, and then you pick companies from your school or your peers to actually invest in. If you're a little bit out of school, like I'm not getting out of there now, I'm 2-3 years out. So, if you're in that kind of situation, look at your town, a lot of the cities like Tulsa, Des Moines, kind of like the lower level cities that aren't getting too much in economic growth, they have a lot of programs for people to move there and build their company and run their company there. St. Louis had a great one last year. I heard about that. They pay you, I think, $200,000. They move you out there. They give you living expenses, and the only contingency is you have to live there for 2 years.
Yeah.
Everybody can, find a good place in St. Louis, I'm sure, to have some good barbecue or whatever they have there. I haven't been there before. But, like look at those different ones. There's ones like the Contradictory Fund. They do a sabbatical program. Sabbatical, essentially, they say if you're in school or if you have a job, you have to quit. You have to stop whatever you're doing and go full time on your company. They give you, I think, $250,000 to do that. There's a lot of these programs. There's a huge list on LinkedIn. LinkedIn gives a list. Nicole Torres, I believe, she's from Capital. She does a really great job on Twitter, and I would say Twitter also. Be on VC Twitter. VC Twitter is huge. I saw a VC job application recently that asked, what is like your Twitter account? Like how many people follow you on Twitter? Because that's where they go and they search for, companies. They interact with each other. They build those relationships on Twitter. They post about events. They post about all these things. So I'd say Twitter is probably easier than LinkedIn to find, just because everybody follows everybody. They're always commenting on people, and you can kind of figure out, who is active, who's not active, who just raised a fund, who didn't raise a fund. You get more of like the day-to-day operations of it. And then people like Nicole really do a really good job of posting, she posts, I think, a weekly list of openings in VC. She posts I think she just posted a nice list of pre-seed funding opportunities, I think yesterday, so people following those right people is really crucial because they're out there and they're ready to help. Because at the end of the day, that's their job, their job is to find out the next company and give them the right funding so they can be successful. So, they want to help you. So, just be able to reach out and, don't be afraid of the no's or the ghosted messages, just keep sending messages. Eventually they'll get a reply.
Now, you are like literally amazing for sharing that. I think, actually, funny enough, although Twitter is now X and it's under new leadership and ownership, but I got your back. It's so funny because there was a documentary that came out on Hulu some time ago. Actually, no, I think very recently. It's about like Black Twitter and just like how, I guess, like how much success and attention Black Twitter has driven to businesses and media and et cetera. And it's cool because you're also mentioning another world. It's not a Black world, it's a venture capital world. And this platform has also given a voice to a community of people to not only just like talk about a subject matter, but also put their money where their mouth is or their fingers are, and like start really seeing growth in entities that they want to support and they think are going to change the world. And I think it's a testament to the fact that social media can't go anywhere. Like, we need social media to an extent to grow, to nurture innovation, to nurture conversations. Should we still have a balance of in-person stuff too? Yeah. Look at Airbnb over here launching, I think it's called Icons or something like that. Basically,
Yeah, I saw that.
Yeah, for those who are listening, like Airbnb is basically launching an in real life experience where things that you probably seen in movies, let's say the Up movie, or I don't think this is true, but Harry Potter, maybe it is true, I'm not sure, but they're creating in real life, I guess, versions of what you saw in movies and TV shows, because the reality is while you're looking for these things online, you still end up going somewhere in person, and they want to keep fueling that because the digital world cannot completely take you away from the real world. So really cool what X, social media, Twitter, whatever it is can do for our businesses and our companies. And I thank you so much for even taking the time to break all of this down in terms of venture capital and accelerators and et cetera in your business model. I just have one final question before we just close it up and go through my little flash round. Are you ready for it? It's really not that big of a deal. I'm so dramatic. The question is, just really quickly. So for VYLN, what is your business like entity? Is it a C Corp, S Corp? And for whatever it is, why did you choose that type of structure?
Yeah, so we are a C corp. We're a Delaware C corp. Partly because I'm from Delaware, and partly because it's the best place. Or I guess now it's a little contradictory or controversial. I know a lot of people are saying Texas to start your company. I think Elon's doing a lot of that, pushing that. And then also the thing to note is that you can't receive any venture funding if you're not a C corp. So if you're an LLC, everybody says start an LLC. Well, you need to restructure your company if you're looking to get venture. But venture is also is I think it only makes about 12% of funding businesses receive, right? So it's not like venture is your only option.
Yeah.
I wouldn't even say it's always the best option at all. Like if you're able to take out debt, I think that's a lot easier. You're not giving out any of the equity that
Yeah.
you would need to do, or if you have family and friends that you can invest, or some communities they pull together and they kind of angel invest in that way. Like things like advisory rounds, and like there's all these other commercial debt vehicles that you can do outside of venture. But if you do want to raise venture, you need to be a C corp. I think so yeah, we're a C corp.
No. I'm glad you said all that. I wanted you to explain all of that because I know for a fact that you have to be a C corp to get the kind of funding that you're looking for. But I don't think that everybody who's listening knows how that works. And I think that for everybody who's listening, once again, like talk to your accountants. Like accountants, if you have a good one, they should be pretty knowledgeable on what kind of structure your business should be, depending on what kind of money you're trying to attract. And if your accountant can't answer at least the fundamentals of an S corp, C corp, LLC, I think you should change your accountant ASAP, okay? You're gonna have a lot of problems, sweetie, okay? Yeah. So anyway, Eric, I do want to say thank you so much for your time. This was a very fruitful conversation. We are not at the end just yet. I just have some quick questions for you. We call this the flash round on the Very Necessary Decisions podcast. It is not primarily about business. It is primarily about you, but the controversial one at the end might be about business. Are you ready for the flash round?
Yeah, let's get into it.
Okay, so make sure y'all listen up. All right. So the first segment is called I Just Want to Know. And the question is like, what are your hobbies? Like, what do you do for fun when you're not doing all this business, hardware, software stuff?
Yeah, so I like to longboard. I think that's really fun. I used to skate when I was younger, but I got older, so I started longboarding a little bit safer. I like to play basketball, and then I'm still a huge gamer, so I'm always playing games. That's always fun to me. Started getting more into like kind of like whiskeys and beers in terms of like tasting different ones and experiencing like the different flavor palettes. So I do like that a lot. I have a dog, so I always take my dog on the walks, and I look at my dog a lot. I do like animals, so like I try to go out. But recently, I've acknowledged that I'm an urban explorer. So like I like to just kind of walk around, and not like a hiker. That's like I guess like a nature explorer, but like I like to just walk around cities and go down weird streets and a weird alley. Just go see what's going on there. Just don't go straight to the direction. Maybe
Yeah,
take a different route and see something you haven't seen before. Those are what I kind of like to do.
I like that. Now, what's your favorite dessert? Really random.
Um, I probably say tiramisu.
That has come up in conversation quite frequently. I honestly just learned about it last year, but that has definitely come up.
Mm-hmm.
Okay.
Yeah,
Ready for the next segment?
yeah.
Nostalgia, taking it back.
Oh.
So, my question to you is what was like your childhood guilty pleasure when it came to TV shows? Meaning, like, what was a show that you loved that you probably don't want your friends to know that you loved watching?
I when I was younger, I really just watched WWE.
Oh my
I don't
God, me
think I'm
too.
trying to think. Yeah, like I went to WrestleMania actually in April. That was amazing. It was Rock and John Cena and Undertaker. It was crazy. But yeah, I watched a lot of WWE. I watched a lot of cartoons, a lot of animations. I don't know about any like kind of like risque ones. Like I really just watch a lot of cartoons, like Cartoon Network. At nighttime, I watch a little Adult Swim. I guess I guess like one is like The Nanny. I don't know if you remember that show coming like Nick at Night.
Oh
I
yeah,
used to
yep,
like The
yep.
Nanny a lot. That was a good show. So I guess that'd be like my kind of weird one, The Nanny.
No, I love that. I love it. I'm not gonna lie. I was a fan of WWE. I mean, it wasn't fun when I was watching it with my cousins who were much bigger than me and would try moves out on me. But I did enjoy watching it. It was lit.
Yeah.
Next quick question. What was your favorite toy as a kid?
Favorite toy? I guess it's not a toy, but I was really into like Pokemon, Yu-Gi-Oh, Bakugan, all of those like card games. I was always into those. Had huge like binder collections of all the cards, even like baseball cards, football cards. I had like a lot of cards.
Yep.
So I say like card games. So I guess like probably Pokemon was probably my favorite, but like Yu-Gi-Oh was like my favorite. I guess it's like this is like the one that is like really intense. You have to watch the show and read the cards, and the battles were. I think the battles are better, but that's just me.
Yep. No, I'm with you on that. And I didn't play too much Pokemon, but I definitely was around people who did. I had like a lot of male cousins and just friends in general, and they were lovers of Pokemon. When I was playing video games, I'm not gonna lie, I was playing like Scooby Doo and like just random games that came with like your Nintendo DS or whatever the case may be. I wasn't no big gamer. I thought I was for like 2 seconds, but I wasn't true to this.
Yeah, yeah.
But lastly, very final question. Are you ready?
I'm ready.
The stir up, the controversy. Just very brief, just give it to me one shot. Do you believe that in a world where a lot of like tech products, specifically like social media products, are free for people to use, and because they're free for people to use, that makes them, the user, the product, right? Where their data is being sold to third party institutions, which we all agree on when we sign up to use these platforms. There has been arguments about should we find ways to pay these users because their data is being sold. What are your thoughts on that? Should people be paid when their data is being sold?
I think that's a very weird question, right? Because if you really think about like what that means, right? Like if I am an advertiser, right, I am providing, say Meta, for example, money in exchange for eyeballs, right? So if I say, you can even go on right now into your Instagram and look at a promoted post, like, for $40, you may get, 2,000 or 4,000 people in LA or Chicago or whatever. But in terms of what that means as you, as the individual, right, I think I guess those are two different things, right? Where it's like selling your data, the data is really just so advertisers know how to target, right? So it's like they're not selling your data in a way where they're like, I guess now who knows what they're doing now, but it's not like, hey, we're going to make a copy of Juju and replicate her and build her personality again. I think that would be kind of useless. And not to say you're useless, but just to make like a digital copy of them outside of the purpose of pulling people together.
Yeah.
I did data science at Columbia recently, and like one of the main ways of doing things is to pull things together, pull like things together. And
Yeah.
that's how you're able to separate things, and you actually just make bins of people, and then that just gives you more targeted advertising, right?
Yep.
And it's like, so I think like in terms of like should people be paid? I don't feel that I should be paid. I understand why people feel like that. They're like, oh, like I should be making money as well. I think that if you understand that the social media and most media companies, right, like they're truly a marketplace. Like
Yep.
social media is a marketplace, and it's like you have the creators and you have the viewers, you have the consumers and the creators, just like in anything else, right? And it's like if you are not a creator, you are just part of it's like Uber. Like you have to have drivers, you have to have passengers. You need to have a good mixing to build them both up at the same time. If no one was posting content on Meta, then no one would have Facebook
Yeah.
anymore. But people continue to feed the content machine. And those people are paid. A lot of people are getting paid. We're back in the day, TikTok used to pay you for like getting over 100 views, just like, they give you like $20, or they have like little competitions, because like these things are marketplaces. So like in a marketplace, you have to kind of understand like what side you are on. Like no one is hopping in an Uber expecting to be paid because you're on that side of the marketplace. You're not on the driver's side of the marketplace. The driver is getting paid. So, I think that, I would encourage people to, create content and get on the side of the marketplace that gives them the best outcomes for what they're expecting.
Nope, that was good. That was good. And honestly speaking, I kind of do share your sentiment. I think that when you kind of understand like how that data is being used, you're not really like, thinking like, oh my God, like I have to get PC. You kind of understand like the fact that if this was a charged experience, it would be a lot more than free. And I guess for Jerlisa, I'm okay with the trade-off. Like I'm pretty much okay. As long as you're not saying that my specific address is blank, 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 go getter. Which once again, they probably are doing that. They don't say that, right? But to our
Yeah.
knowledge, it's more so demographic data, more persona based data. And that's helping people basically target a specific audience to sell a product to. And I know that for me, I'm pretty much comfortable with that. But I also love social
Yeah.
media. So what do I know? But
Yeah, I think that like the other part of that too, like you said, is like, like there's a lot of data breaches and a lot of data leaks. Like, like your information can end up on the dark web and people buy, like a lot of scammers, they're getting, these big dumps of data. So it's like I think that people should focus all that energy into saying, we need better security, we need better encryption
yes,
services if you're gonna use our data. But,
absolutely.
like cybersecurity is one of those things where you're always playing the cat and mouse game, and it's one of the things where you cannot create a prevention of something that doesn't exist. But the people that are looking to breach and attack your systems, they already know all of the things that they have out there. So all they have to do is go one layer above, and then the cybersecurity tries to come back, and then they come back. So it's always one of those things where you're always behind in cybersecurity. So it's really hard to prevent things. But you could do your part. Do a VPN if you want to, or don't put your stuff out there. Like you clean up your Facebook post from 2013, and all that
Yep,
stuff.
yep,
You
yep.
can do your part, but yeah, I think cybersecurity is more important than the actual payment, because when we're talking about the data, the companies aren't gonna, I mean, Cambridge Analytica and that whole thing with Facebook back in
Yeah,
the day, that was a thing. But that kind of doesn't happen anymore. I mean, who knows what's going on really, right? I guess we'll see,
we're gonna find
and
out.
time will tell. But yeah,
No, I'm absolutely with you, and I appreciate you being honest about it. I think it's a very funky question to have to ask someone because no one wants to be the villain, but the actual VILLAIN. When you guys
yeah,
hear villain, we're talking about VYLN. Very different,
yes,
right? But I do appreciate your rawness and your honesty, and I do want to say thank you so much once again for giving me your time, giving our audience your time, and just dropping so much knowledge on us about the world of audio, the world of gaming, the world of VC and capital access and more. And I think that there were so many things that you've been able to educate us on during this podcast interview. So thank you so much to you, Eric. Thank you to everybody who's
absolutely.
listening. And if you guys want to learn more about Eric, please look at the description below. And it will have some links to his website, socials, the whole nine yard. Thank you again, Eric.
Yeah, thank you so much for having me. I really had a good time.
Thank you. Bye, everyone.